An article recently came out of where the ultra wealthy put their money, and it is shocking the information in this article. The only reason I'm sharing this with you today is to teach you how to invest like the 1%, how to invest like the billionaires out there. This is basically going to be the roadmap for financial success, and I'm so excited to show you it in this video. Hi, I'm Giannino. I teach you how to make money, grow money, and invest money. So please like this video and subscribe to the channel. I would greatly appreciate it. I recently released a video on how to create wealth using the article and the information I learned from it. That video is to the top right of me. All it does is compare where the middle class invest their money and where the wealthy invest their money. But that same article I'm using today, I didn't go in depth in the video on where the wealthy actually put their money. So that's why I'm putting the video out today, is to tell you exactly where the wealthy invest their money and how you can do that for yourself and possibly become wealthy from it. Like I said earlier, this is going to be the formula on how to create financial success in your life. That's why I'm so excited to give the information to you today. If you think about it, the 1%ers did not magically become wealthy overnight. They had a role model in their life of what success looked like, and they tried to replicate that success themselves. So that's all we're trying to do today, is look at the success of others and try to replicate it in our lives. Because the truth is, you don't have to reinvent the wheel to become successful. All you have to do is look at what the successful are doing, and it's easier than ever nowadays because we have the internet. We also have books, audio, and videos of actual successful people talking about how they became successful, and these are just ways for us to learn. Seriously, it could not be any easier to become what you want to become in life through the internet. So let's dive into it right now. Look at every category of the wealthy and where their money is and how you can replicate that. Right here, as you can see, is the 1 billionaires. This is every portion of where their money is, and we're going to start with the largest portion on the right. This is the business interests. This is where most of their money is, and it comes up to 50 to 60% of their net worth. If you're curious what business interest means, it's basically the business that the person owns or they manage. This is where all their wealth stems from. This is also our first clue on how we can build wealth to replicate this, because 99% of the ultra wealthy either inherited a business or they made their own business in their lifetime. So knowing this fact, I have to ask you, if you want to become financially successful and wealthy in the future, why are you not building a business for yourself? That's the cold hard fact right there. Is to become wealthy, we have to build businesses. I recognized this a long time ago. I built YouTube and a trading group as my business right now, and it's fun, it's my passion, and I love doing it, but I would not have been able to do this if I didn't have terrible jobs in my past. When I was in college, I had to work 3 internships where I basically felt useless. I felt like my time was being wasted. I was also shamed by other people in the workplace. And the saddest part of them all is I was never pushed to my limit when I was working. I think you can relate to probably any of those, or maybe all of those scenarios. But when I was working a job and Friday came, I remember watching a clock tick minute by minute, waiting for 5 o'clock to come. I remember thinking, I'm just wasting my life here on earth watching a clock tick just so I can have somebody tell me I can go home. I vowed that day, after working 3 terrible internships, to never work a 9-to-5 job and never work someone else's dream. And the only way I was going to get out of a job and not do it for the rest of my life is by building a business, which is what I do every day, and the best part is it's my passion and I love doing it. The true core of what I do is just put out value on the internet and really expect nothing in return. But maybe you're curious what businesses you can build and how you can get out of your job, and I'm not going to go into all the types of businesses you can get into now, but just type on the internet, and in this article right here, this is 101 business ideas. If you just chose 10 of them, you might have one winner. The key to building businesses is to accept failure, because your first 5 businesses might be complete failures, and maybe that 6th business might be a winner long term and get you out of your job. So it's important to try multiple things to see what sticks. And when you find true success in one business, go all in. I have to guess this is what the ultra wealthy do, and this is the example we have in our lives to create wealth, financial success, and happiness every day. Moving on to the second place ultra wealthy people put their money is into real estate, and it should be noted this is only 5 to 10%, and if you notice this on the chart, it's one of the smaller places they put their money. So a lot of people think real estate is the place to get rich quick and to create wealth over long periods of time. And this example should show you that it's really not a popular place to create wealth for the 1 billionaires and the 1 percenters. So if the 1 percenters aren't using real estate to create wealth, why are you looking to get rich quick in real estate and make that your sole source of income? The only reason the ultra wealthy have real estate in their portfolio is to diversify their investments, because they don't have to be at risk at just their business doing well or just their stock portfolio doing well. By diversifying, it offers some more safety to the 1 percenters. I recently made a video on this comparing real estate investing to stock market investing. I'm going to link that video to the top right, but some takeaways I got from that is real estate is super time consuming, involves a lot of debt, and most importantly, real estate is not the safest investment. It also involves a lot of risk and a lot of knowledge and research that goes into getting the right property and managing it well. So for all these reasons, I can only assume this is why the 1 percenters don't have a lot of real estate in their portfolio. Moving on, we're going to lump in the next couple categories together. This is fixed income investments, stocks, and lastly mutual funds, making up about 30% of what wealthy people own in their portfolios. And here's the kicker, these are all stock market investments. I talk about stock market investments all the time on my channel and how important they are to integrate in your life if you want to be wealthy. And I think this just validates my point. If wealthy people have their second largest holdings in stocks, in bonds, and mutual funds, then what is your excuse of not putting your money into the stock market? I should note most of their wealth is in their business, but the second highest place they put their wealth is the stock market. And the best part about the stock market, unlike building a business or getting into real estate, is anybody can get into the stock market. It is completely easy. I'm not a financial advisor, this isn't financial advice, but let me just dive into the 3 places wealthy people put their money into the stock market and how you can too. So the first place, those fixed income investments, those are what we call bonds. Bonds are one of the more safer investments out there because they're backed by companies and most importantly backed by the government in some instances. Government bonds right now pay a measly 2 to 3% interest rate, so every year on your investment you're making 2 to 3%, which really isn't impressive. But when you're wealthy, all you really want at some points of your life is a return on investment, and you really just want to beat inflation. This is all bonds allow you to do, and they're one of the safest ways to get paid every year. Like I said, the disadvantages of a bond is the returns are much smaller than the stock market or picking index funds or mutual funds or individual stocks. The next place wealthy people put their money in the stock market is stocks, and this is pretty vague because it could be mutual funds, it could be index funds, or it could be growth stocks, dividend stocks. It could be a lot of places in the stock market, and you can put your money in any of these places too, but some of these places do better things than others. Let me explain a good example. So if you're 55, you only care about getting paid in your retirement, getting paid every year, and having that cash flow. So dividend stocks are a great investment for people looking to retire and get that paycheck every couple of months. But when you're young in your 20s and 30s, you don't care about dividend stocks and getting paid because you have a job that's most likely paying you. And the downside of dividend stocks is they don't have great growth over long periods of time. So during these times in your 20s and 30s, it's good to look at growth stocks, tech stocks, maybe some high risk, high return investments. But this is where you can get into trouble too, is trying to be a stock picker, because some of the best investments are just the index funds. This is where you hold one stock that holds 300 stocks, offers safety and diversification, and lets you follow the general returns of the overall index. So that's how people can invest in just stocks. But then there's this third category that wealthy people put their money into. I don't really talk about it that much, but this is mutual funds. And this is actually a very exciting thing, is because a lot of companies put stocks together in one place and then people invest into that one fund. Just for example, if I am a good stock picker for virtual reality stocks and I pick the 10 best virtual reality stocks, I could find a bunch of investors to put money into that fund. So we could own all those stocks together, offering the same safety and diversification of index funds. So mutual funds, if you didn't pick up on it, are managed by a person where they pick the stocks into it. They may have certain knowledge you don't, and you can get into certain sectors that you may not even know anything about, like European stocks. You can get into artificial intelligence stocks, virtual reality stocks, pot stocks, and because you don't know about that sector but you're excited about it, you can buy a mutual fund where that person knows about the sector, they're picking stocks, and now you can own the whole sector with a little bit of safety because there's more stocks in that one mutual fund you own. But the downside to mutual funds is that the person picking the stock is relied upon for the success of the mutual fund. So you have to make sure you're buying mutual funds with great companies that have great track records and are trustable for long periods of time. The last category wealthy people put their money in is way over on the left side of the chart. This is about 10% of their net worth. And the funny part is their 10% chunk is everything we own as the middle class. The middle class doesn't own anything to the right of that. Most of the time, they don't have their own business. They don't have real estate investments. They don't have their own stock market picks. So this is probably the craziest point I'm trying to make, is that wealthy people put 10% of their money into stuff we put all of our money into, and it doesn't make up a lot of their wealth. So you can't get wealthy investing like the middle class. The middle class investments I'm gonna put on the screen right now, as you can see, it's your house, your car, your retirement account, maybe your cash on hand. All this stuff doesn't really work for you over time and doesn't make you money. So these aren't the best places to invest. Your house is a liability. It gives you a bill every month. Cars depreciate. So that section of your wealth is actually getting smaller and smaller every year if you put your car into account. If you're holding any amount of cash, that's getting smaller and smaller every year from inflation. So I think you get the idea. The investments of the middle class are some of the worst investments you can make, and that's why the wealthy don't have a lot of money into them. They focus on building businesses, buying real estate, and investing in the stock market as much as they can. The last thing I want to point out, this is going to blow your mind, is that retirement accounts could make up 40 to 60% of the net worth of a middle class person. But when you get into the $1 billion category for net worth, people don't have retirement accounts. The funny thing is, when you own your own business, you don't want to retire because you're waking up every day passionate about what you're doing. You're not trying to work towards retirement and getting out of a job. You actually like your life and you like what you do every day. So it's pretty crazy how the wealthy don't care about retirement. That's just something that stuck with me in my head. And please click the video to the right of me. This is gonna shock you. This is real estate investing versus stock market investing, and what is the best route to go. You'll love it. In this video, I'm gonna be answering all those questions and settling the debate of all time: is real estate investing better than stock market investing?